What are the two types of debt to income ratio, and what can you do to reduce that ratio so you can get your home loan? I'm with Will Hollister today with Atlantic Coast Mortgage. Will is going to talk all about debt to income ratio. Big thing, there's two types.
Yeah.
Tell us.
So there are two types of debt to income ratios that we consider when we're looking at your home loan. The first one is your housing expense, which is going to be your proposed monthly payment, all inclusive with insurance, taxes, and everything, against how much your monthly income is. So that's going to be the first of the two. Mm-hmm. And then the second one is going to be that housing ratio that we just talked about, as well as all other monthly obligations thrown in against that same monthly income that you're making.
Right.
So the first one is just comparing your housing to what you're making, and then the second one is all of your monthly payments combined compared to your monthly income.
And this is basically a yes or no factor on whether or not you're going to get the loan. So if you have a great ratio, it doesn't mean that you're going to get a better interest rate, marginally, but it's more of a yes or no decision question that your lender is going to look at. All right, so what can we do, what can our clients do to get a better ratio so we get that loan?
Yeah, so as JC said, one of the big important reasons to try and get that DTI as low as possible is to increase your maximum qualification, right? And so a couple easy, quick ways that you can maybe get that DTI a little lower, keep it within that range for that house that you might want, is going to be to take a look at what your monthly obligations are. So if you're an authorized user on other people's accounts that you're not using, if you're a co-signer on someone's car, someone's loan that you're not making payments on, it might be a good idea to get yourself off of those, refinance yourself off of those, so we don't have to count those payments in your monthly payments. Another way is, if you can consolidate any high interest debt into, more manageable monthly payments, or maybe extend the life of them to decrease the monthly payment without changing the balance overall.
So this is really good advice, Will. We also always have a disclaimer at the end of these. This is not professional advice. I'm a real estate agent, you're a loan officer, broker, but every situation is different.
Of course, and whenever you're making changes to your credit or credit report, whatever's going to be on there, it will have an impact, whether positive or negative. We can't say for sure without looking at your specific situation. So before you ever make any big changes to your credit, always reach out and make sure that it'll work out the way you think it will.
Great advice. Thanks, Will, for joining me today.
Thank you.
If you like this video, click the link below, like the video, subscribe, and if you have any more questions, you can always reach out to me or Will. He's the expert with the home loans and all the information you need to know about debt to income ratios. Click, our information is right below. Talk to you guys later.